Dr.S.DHIVYA, Assistant Professor, Department of Commerce and Computer Application in Dr. SNS College of Arts and Science, Autonomous. In this lecture video, we are going to cover is agriculture credit. The last video session, we have discussed the sources of agriculture. So in this session, we are going to briefly explain about how the source of agriculture credit is supported for the farmers. So we know already, based on the time and based on the purpose, based on the security, based on the lender and based on the borrowers, how the agriculture creditors working process is happening for the between the farmers or between the lenders and the borrower. First we will see based on the time, because we know the agriculture credit, the meaning is a certain amount, certain condition, certain purpose by return back to the purpose of getting interest. This is the agriculture credit, right? So based on the time, because I believe some person and the farmer is asking a money and I believe the person and giving him money, I should know how much the period he is going to return back that amount for me. So based on the time we can say that we can divide it as three types. It may be a short time period, medium and finally large. Short time period we can say when the farmer is getting money from me and the person is returned back the amount within a short period, we can say 12 to 15 months. It is called as a short term. Short term, with this amount, if I give a 1 lakh for the farmer for the period short term 12 to 15 months, what can he do between the 15 months with the amount of 1 lakh? He can cultivate a few crops, right? Or he can buy a limited technical process like machinery he can buy and he can utilize it in the farmer support. So within the short period, when we are getting money for 12 to 15 months and he is using that money for the cultivation purpose or purchasing a machinery like this, it is called the short time period. And it is a medium, you can say it is a 15 to 5 years. 15 to, that is more than 2 years to 5 years. So the amount I am giving again for some other person 1 lakh for the period 15 to 5 years, it is called as a medium term time. He has to read back within 5 years. So this 3 years, what can be the farmers can do? He can. So the medium term is 15 to 5 years. The farmer can purchase a new land within this amount and he has to return back the amount within 5 years. That is called the medium term. And large scale, that is more than 5 years. It may be extended to 10 years. So with this, what can the farmer can do? They can purchase a new land, or they can purchase a new technological inputs to use and develop their cultivation process. This is the process of time. So with this short term, medium term or the long term, the farmer can buy the amount and they have to return back with the interest, certain amount, with a certain purpose, with a certain condition. It may be short term, medium term or long term. They have to return the amount to the type of interest also. That is called the based on time. And next one is the based on purpose. We know the certain condition is that they have to return back, it may be 3 years or 5 years or 10 years. The certain purpose is that there are again it is divided as a 4 concept. It is an investment concept, or it may be a marketing purpose, or it may be a consumption purpose. So based on the time we can take money from the person and we are using it may be an investment purpose if I investing the amount for the seasonal benefit, like we can say Diwali. So what is the main for the Diwali what we are doing? Regularly we are using crackers. So it is seasonal. Likewise the farmer use based on the spring season. They are cultivate their crops and they get the amount, that is the investment. And marketing. See, after investment we have a maximum productivity. We have a maximum productivity of the crops. But now what we have to do? We have to market that product. So 75% of the concept will depend on marketing. We have plenty of crops. We have plenty of maximum consumption we have produced. But only when we are marketing this concept, we can get the profit. So 75% we have to spend the money in the market to sell our product. and then consumption. We have to use it, right? So based on that, we have to consumption, we have to use the fertilizer or pesticide properly. We have to give a proper regular cultivation. We have to give proper inputs to the crop. Then only we get maximum productivity. That is called the consumption. And the security, we are getting money based on the time for the purpose we say. But the security, only the concept of belief, nobody will give the amount. Is it right? Say, I am believing you. Can you give a 1 lakh for me? No. So only with the security we give the money. So there are 3 types: personal security, collateral security, market security, and unsecured. So personal security, based on my personal qualification or based on my promissory note, they are depending me, they are accepting me, and they are giving the money is a personal loan. So collateral loan, it is a movable property. The asset, like you can say LIC bond or government security bond or missionary bond, like this asset receipt. We can submit that one, and when we are collecting amount from them, it is called the collateral. It is a movable property. When we are pledging the property for the movable property, and when we are getting the loan, it is a collateral. And mortgage loan, it is a immovable property. What are all the immovable? Land, building, right? So based on the document, when we are submitting the document, we can pledge the document and get the money is called as a mortgage. And what is the unsecured? Unsecured, without getting any movable or immovable documents or property detail, if they are giving the loan with the belief of me, or the third parties will not enter in that, it is called the unsecured. Based on this, if anybody is giving loan, it is for the security purpose. And lender, who is lender here? There are 2 types of lender. That is the institutional lender, and next one is the non-institutional lender. So we all know non-institutional lender, it may be my money lender, or it may be my friend or a relative, agent, broker, someone whoever it may be. They should not include in the institutional. They are called as the money lender. In the farmers, near to the farmer house, or money lender, agent, broker, relatives, friends, they are called as a non-institutional. Institutional person, we can say it is a bank. NABARD. We all know NABARD is the primary apex of the others bank. Cooperative bank, commercial bank, regional rural bank, we can say many banks. These are called institutional bank. So when we are getting loan for the institutional bank like NABARD, or when we are approaching the bank and we are getting the loan is called as the institutional. When we are approaching the people like money lenders, they are called as the non-institutional. And who is borrower? Farmer is the borrower. See, again I divided the borrowers as a small farmer, large farmer, tribal farmer, or medium farmer, cottage farmer, whatever it is. Based on their SME, small scale industries, or based on their crops they are cultivating, they are divided like this. Small farmer, they are having very poor crops or poor land development with them. Or they are tribal people, cottage industries, within their family they are producing something, or within their cottage they are producing, or they are having a handcraft material, preparing something, they are called as a tribal. So these are the sources of agriculture credit, and this is the basic concept that when the farmer is getting loan from the others. Have you all understand very clearly? Thank you.